Hello, guys. Once again, I welcome you back. Today I'm going to be sharing some awesome strategy on how you can trade a volatility 75. But yes, I'm going to be using volatility 75 to explain this, but it's applicable on all other synthetic indices. For this strategy, it's a support and resistance. Like we are going to be more using more of support and resistance and then using the S&T approach. So this is one of my approaches that I use when trading synthetic indices. So now I can delete this S&T approach. So there is more to this approach, but I'm going to be giving out the basics about how we can use it, and I believe we can utilize the information here, and then we use it profitably. So for this one, we are going to first of all, I think in most strategies, the higher time frame perspective is really, really key. So for this strategy, I'm going to start with the issue of time frame. We are going to be using two time frames. So we start on the daily time frame and then we refine to the H1. You get? So you only use the daily and the H1, or you can start on the H4, then you go on H1. So sometimes when we over refine, you can like it can lead to missed entries or early entries. So basically we are using two time frames. So on the high time frame we get the high time perspective, long term perspective, and then on the small time frame or the H1 we get the entry point. So this reason being that synthetic indices, they trade for in a given direction for long, and then sometimes joining the trend is quite hard. Sometimes even determining whether we've gotten reverse or not, it's also hard. You get? So then on the high time from the daily, we mark out the extreme points. So we are going to start. Let's get some of the extreme points. Basically, here I'm talking about the external structure. So let me show you the points that we are looking at. These points, these external points that you're seeing. You get uh, these ones here, the outside points, these extreme points. So we are not really looking at these ones. Let's say, by the way, this is what I mean. If I told you see something like this, and then the market lesser shifts, and then it may continue to do those things like that kind of movement. So we mark out these extreme points. You get? So which means they should have a change of character to them. You get? There should be a change of character on those points on the daily time frame. I'm talking of these points that you're seeing here. You get these extreme points. So we are not looking at these internal ones. We tend to neglect the internal points, and then we go on the external ones. So I just wanted to first show you the points that we're talking about, those ones, the outside ones. So inside we find consolidations. You get? Because by the what I've realized about synthetic indices, the market maker really makes a lot of money when it's consolidating, because it can get confusing. You get? So in my analysis and backtesting, I've realized that for synthetic indices, it is best to get entries on, let's say, these ones. You get? If at all you get an opportunity to get in there, you'll be lucky. You can get in and then you just wait. You get for days. Let's see if at all you are able to determine. I'm going to be showing you how you can determine these entries, and then you'll be in the trade for 13 days. Imagine. You get? So this is a swing approach. Let's say for this one that we are going to see, we can get in here and then we are in a trade for about 9 days. Those are quite many. You get? So for these ones, you get in, let's say, if we determine that one, how many days are those? Let's say determine taking this to be 50 days. You get? Those are how many months? So this is what I wanted to this is what I want to show you. So let me delete that, and then we start. So now, if at all we identify one point, let's say this one here. First of all, you're going to mark it out. You mark it out like that. You mark out the extreme one. You get the extreme point. So now, the next thing we can do, we can even highlight that candle. Now, for a bullish move, for if at all we are validating, let's say a demand zone, this is what we are going to do. You look at the here down, which candle are we going to be marking? Let me show you the real candle with, let's say, support. Now we look at this extreme point down here. So you're going to look out for the downmost candle. You get, it can be bullish or bearish. You get, you're going to find that in some cases you can find, let's say, a bullish candle being at the tip here. You get, but then it doesn't matter. If I told you, you look at the candle that took out a low and then it is taken out. You get, this one, it took out this one, it took out this one, it swept down below this one, and then it was taken out. You get, it was taken out. So you can highlight the whole of that candle. You get, so we can mark out that zone. Likewise, let's say if we come up here, the real candle that we are interested in, we can see that this candle took out this one and then it was later taken out. You get, so here we can mark out that candle. You get, you mark out that candle. So that candle, it becomes the real area of, let's say, uh, uh, the candle of, like, the zone that helps us to identify the zone of, let's say, resistance. So we get interested in that zone in future. You get, we can get interested in that zone in future. So later on we can see, as we shall see later on, we can see that many times price can come and tap there and then it drops again. So but we are not so much interested in that one, in that zone for now. Let's get back here. So now, when price approaches this zone, you get, when price approaches this zone, so I want I'm going to be illustrating mostly using this move here, like how would have caught on this move. Let me show you this one here that we are seeing over here. You get, so I believe if at all you understand the concept here, you'll be able to understand how you would have taken on these moves that you're seeing inside here. I believe you'll be able. So if at all you're interested in me showing you this one specifically, I can do a separate video next. If at all you write in the comments below, if at all you're interested, like you want me to do it for these moves that really happened. But then if at all I explain this one here, if I explain this one, the same explanation, like, it would help you to take on these moves that you're seeing, these two moves that were bullish. So at least that's why I thought it that I should explain this one, and then maybe if at all maybe you really need it, I can also do another one for these two moves. So now let me delete again. So supposing price has come for us, when price comes, you get, now this is a general understanding. When price comes, most of for synthetic indices, you're going to be watching price as it reaches these external points. You get, as price reaches there for you, you just sit back and relax. You get, because here, this is where they mostly grab the money. You get, they will take your money, because sometimes you're lost between, are they going to really continue going down, or they are going to reverse? Because I realized that if at all you're using, let's say, basic market structure or smart money concepts, you may find that, let's say, this is we can say that maybe this is a strong move where we've gotten, is it a strong area of supply, but then later on you find that price came and then washed it out. You get, so you get lost. Sometimes you mark out a zone like this. By the way, I used to get really annoyed at these assets. Sometimes you mark out your zone like that and then you think that it's going to hold because maybe it has all the qualities. All along you find that price comes and then shoots through. You get, it shoots through and then it returns back, it reverses back. So sometimes it can be annoying. So I want I want you to know this. So as price approaches a zone like this, or even a point like this, you get, even a point like this, what are you supposed to do? You get, what are you supposed to do? It's this. For you, you wait. Now when you have, let's say, your line marked out here like this at the tip, you get, whether they've broken and closed below, or they've broken and then they will get a rejection up, we are going to go on the H1. You get, we are going to go on the H1. So now we are going to go on the H1 and then I show you something. H1, it is the point of refinement and it is the area where we take our entries. You get, so we refine and take the entries on the same time frame. There's no need of over refining. So let's look for our point. Yes, it is just right there. It is just right there, as we can see. You get? So this is where price came, it shut down, and then it moved back up. You get? It moved back up. So now, sometimes it's a possibility that for synthetic indices, I told you, it is possible that yes, the broken structure, price may return, you get, price may return, and then it proceeds down. But that's none of our business. You get, I will show you what you do when, let's say, price reverses back and then continues. So in this zone, when we come on the H1, we are going to be looking for what we call a change of character. You get? So before we get a change of character, we are interested in a shift, what we call a shift. So this is what we are interested in. This is what we are interested in. So we are going to see a move like this. You get? We are interested in something like this. So we are interested in something like that. So let's say price is just there. So what do we see here? We can see that here um we got we took out buy side, the recent high, and then we shifted here. You get? So now the same thing comes and we get, let's say we take out the most recent low and then we displace higher. You get? I used to talk about shifts. You get? We displace higher. So now we are, this is our range. You get? We have our zone here, market sold, the price went down, and here price goes up. You get? So we are faced with such a scenario. So where do we take entries? So this is what you are going to be waiting for on H1. You get? On H1, this is what we are going to be looking out for. So we are watching this. We watch this zone here. You get? This zone that was that is the most recent area of supply. You get? The most recent area of supply, because we price shifted and then we broke down, and then actually we got breakout structure, and then we shifted higher. You get? So now, this is the next thing that we are looking out for. You get? We are looking for price to come. For price to come, it breaks above. You get? If it breaks and closes above, if it breaks and closes above, you get? No matter how far, it will continue. You get? So for us, we place our entries in at this zone here. You get? Waiting for the market to push back up. You get? In most cases, by the way, this is going to have a high win rate. Remember, our target, we've gotten our bias on the daily. That's why you're going to be taking entries, and then at least they'll run for a minimum of 2 days. You get? A minimum of 2 days, but you're going to be running a week, 7 days, 9 days, two, even a month, or even 2 months. You get? Because we get higher time frame targets. You get? We get higher time frame targets. So now I've showed you, this becomes our area. If I told the market comes, it breaks above on the H1, it closes above, we take our entries there. So now, where is our take profit, our stop loss? Our stop loss, we validate, we use the zone below. If at all price comes, and then let's say it buys it, and then it comes, it washes us out, we are good to take that loss, because in most cases their price is going to proceed going down. But at least this one, if you backtest, I request you guys to go and backtest it, you're going to find that you're going to have a high win rate. You get? So let me show you that in reality, how it really happened on the charts. Let me first delete this. uh Let me remove these ones, these lines. So mhm. So now we can see that we have, what did we see? We can see that price broke down, and then we can see this move that I've been talking about. Price came down, it went somewhere up. So we took out this high, and then price shifted, it went down. You get? It went down, and then we can see that here also we get a shift. You get? We got a shift there. You get? We got a shift there. So now price moves up, but now what do we get interested in? We are interested in this zone. You get? And then this zone is next to our validation and invalidation line. Okay, this line of support or resistance. You get? This extreme line that we drew on the daily time frame. You get? That's where we are looking for this pattern. You get? So now we can see, for us, we are interested in that zone. So we can highlight this kind of this the breaker order block there. You get, I think I talked about breaker order blocks. So this one becomes our entry zone. You get, it becomes our entry zone. You get, the invalidation area is below this low here. You get, it's below this point that uh, where we broke structure. You get, so our stop loss is just below there. Okay, below that line that you're seeing. You get, so now this one becomes our area of taking entries. You get, so supposing let's say you've taken your entry at the top here. Supposing you've taken your entry at the top there. You get, so we look for our long position, and then it is there. Our stop loss, we said just below there. You get, so we are going to be seeing. So now we go back to our daily time frame. We go back to our daily time frame. So let's wait for the chart to load. Sometimes my charts will take long to load for trading view. Let me see what I can do about it. Let's get back to our daily. And now, so we are targeting, first of all, we target this high. You get, we are targeting the most, this high, the top here, because I told you this is the explanation for that. This is the reasoning for that. I told you, for us, why do we take this to be our take profit point or up here? You get, but we target the lower part of this candle. You get, that becomes our most sure take profit point, or you can even target the top. Why am I doing that? You get, why am I doing this? It's because I told you, if you get your entry at these extreme points, you get, if you get your entry at those extreme points, normally, you get, normally uh normally price is going to be the next time we get a serious reversal, it's going to be still at these extreme points. In between here, the selling and the buy, the selling that happens in between here, in most cases, it is to grab liquidity. You get, for synthetic indices, trust me, you're going to benefit more if at all you are capable of taking an entry at the beginning of it, like it when it is just starting. You get, sometimes joining along the way, though I have an approach for that. By the for that one, I use mostly the BTMM strategy, like to get in along the trend. You get, joining the trend most times there, I use the BTMM strategy. By the, I'll be sharing the basics of how I use it. I think in the next video I'll be sharing, these are indicators we're going to be using for moving averages. So I request you guys to stick around, because I think it will also help. There, it is so good. It helps me so much, like getting intraday entries where we use for moving averages. But I'll be showing you. So in most cases, the most important thing here I'm showing you is that we are targeting these extreme points. You get, so we've gotten in there. You get, we've gotten in there, but our entry to get in here, you get, to get in here, it has been influenced. You get, it's been influenced by this point that we are seeing over there. You get, so we've referenced it. You can see that the market came. You get, price came. It shot below, but you look at where we've gotten in. We've gotten in at the top here when they've grabbed their liquidity, when they've done everything they want. You get, when they've done everything they want. Let me show you one more example. Hopefully you will understand this better. Hopefully you understand this better. I think let's look at the most recent move. We're on VIX 75, by the way, you guys don't forget. So let's look at this move that is really happening. So you can see that right now, because I'm going to apply the video just like today, you can see that right now we don't know whether let's say we are not sure whether it is going to drop further or it's going to continue. Most times you're going to find that when we go by the when you go on VIX 75, I'm uploading it today. What's the date today? I think it's the 29th of 29th of 29th of 29th of September 2023. So I don't know when you'll be watching this video, but you'll go back to the data and then you check out. Now you can see right now if you go on H1 in this area, you can see that here we got a reversal. Like there was a supply zone that was price was moving up, and then we got a shift. Like there's a supply zone, and then now it's consolidating. So along the way, you get, this is where synthetic indices get tricky. Like here in the middle, they can choose to consolidate, and then you get lost. But then if you got in at the tip here, like at the bottom here, as we are going to see, here you're safe. You are safer in this, like in this zone, you get. So let's say we've marked out this area of the outermost structure, you get. So for us to mark it out here, for this one we can see that here it broke and closed, you get. Sometimes that's why sometimes breaks and closes in synthetic indices do not matter, may not matter so much, you get. So here it broke and closed in this area. But here, this one that we've looked at, but for this one, it broke and then it just tipped. But sometimes it can also hold meaning, or seeing what we call weak structure and then strong structure. You get, we shall see that maybe in later episodes. So this is it. Here we mark out our zone here, our area here. You get. So what do we do? I told you we drop on H1. So let's drop on H1 and then we see what is on H1. So now this is our H1. You get? This is our H1 and this is our zone. You get? I told you what we are going to be waiting for. We are waiting for something like this, and then we see something like this. So as price comes back, we want to see a close above this area. You get? That's what we are looking for. So for this one, I've explained using the buying side, you get. I hope maybe in the next episode I can do when we are getting examples for the cells, you get. And then in after that next video that we shall do, that I will do, I'll bring in the BTMM strategy, how the basics of BTMM, how I use them when trading synthetic indices. I think those are the videos that are coming up next. So now this is our area, this line, you get. So now we can try to understand this zone here. So first of all, we can see that here we did not have a clear move, you get. We can see that this was a mere consolidation. Price just consolidated here, and then okay, it shot down, and then we can see that we went up. So should we validate this zone, you get? Can we validate this zone, you get? Most probably not, because you can see that okay, price came back and then it tried to buy a little, and then it came, maybe here it would have taken you out. But now we want to get a clear move where we got. Now we can see that for this one here, this was a mere consolidation where price moved up and then it shot down. But now we are looking for this kind of move I told you, where we clearly see uh, this change of character, you get. So for me, this one I may call, let's say, uh okay, for me this is what I normally call a change of character. Anyways, we can see that here price clearly shifted downwards, and then here we can see that price clearly broke up, you get. So we can highlight this zone here, you get. We can highlight that zone there as our zone of taking entries. Stop loss where I told you this low here, if I told this one, this point here, it becomes our stop loss zone, you get. Areas of here we cannot take any more losses, because in most cases here, if it breaks below, you get, if it breaks, let's say below, in most cases here, we are good to take that loss. But it's more likely not to do so if at all there have been a clear change of character here, you get. So now here, this is our point of taking entries. So supposing we've taken them at the start there, you get, we've taken our entries there. So now we look for long position. So stop loss, I told you, we just target it just below there, you get. So let's extend this, let's extend that, and then we go back. Remember, for H1 is helping us to refine, like we on H1 we are refining. Though for this zone here, if I told you want take entries, maybe you can drop further on M15, but for me personally, I don't always do that so much. I don't want to, it's not good to over refine. You take the risk, you get. So H1 It is to help us to determine the area of taking entries. Then we go back on our daily time frame to determine our areas of taking profit. You get our areas of taking profit. So, uh, what do we target? You get what do we target? I told you, for me, I would be more willing to take profit there because this is the area where I hope to take entries, entries that maybe are selling entries possibly if at all we do proper analysis. So target just up there. So now, if I told you take your entry there, remember by the if the same thing here applies, we can see that we've used this area to take entries. You get, but you look at where we are taking our entries exactly, just up this side when we are a bit sure. You get, because here in this zone, trust me, it's really tricky. You get. So me, at least for me, this approach, this is the one that I'm using. Sometimes it may not be easy to take entries at the tip here, though there are some other approaches that you can use, and then you drop further down, maybe you take entries here at the bottom. You get, but then this is like the here you've a bit reduced the risk because in most cases they will run on you here. You get, though you don't have to get in solid because here in the middle for synthetic indices they can consolidate. Here you're seeing it like you may see, let's say, this move here like this. This is the funny thing about synthetic indices. Sometimes higher time frame candles may not clearly show what is happening on lower time frame candles. This move here, when we go on M15 or H1, you may find that there are periods when the market was ranging so much. You get, so for synthetic indices, I've realized that sometimes a higher time frame candle may not clearly show what is happening on lower time frames. You get, I've realized that by the because even in these candles here you can see that this was an impulse move, let's say, for this candle, but when you go on that day on the M15, you may find that it was consolidating so much. You get, it was consolidating so much, yet here on a higher time frame it is like a clear imbalance. You get, it looks to be an imbalance here, but in reality it wasn't the case. In reality it wasn't the case. So now here it's consolidating, but if it moves, so far it has moved how many? We can see from that point it moved how many days? 3 days. It was buying 3 days. So if at all you want, you can protect your stop loss there. You get, you can shift your stop loss there. If at all the market reverses and takes you out, at least here you have some profit. You get, but at least it has moved for 3 days. You get, it's not a guarantee. It's not a guarantee, but I cannot assure you that it must reach here. You get, that it must reach this point here. It's not like I cannot guarantee. You get, because even me sometimes I'm wrong. You get, and then here it's not a guarantee that the market was supposed to reverse and then it shoots back up like that. For synthetic indices, by the way, it's worse. You get, it's not a guarantee. That's why I told you here we wait for clear confirmations. We wait for clear confirmations. So um these are some of the approaches that I teach in my mentorship, by the way. In my mentorship, though there in mentorship, I tend to use so much of Forex. Like I talk so much about Forex, though the knowledge in Forex, like for these synthetic indices, normally I just give some simple guidelines, but in most cases there I tend to talk so much about Forex. So I wanted to make that really clear. Though, for special purpose people, if you're just interested in synthetic indices, then we are good to go. I share some tips and tricks about synthetic indices, like this one. You get this one that I've shared. Though, there I go a little bit in more details, like I give more details. But even here on YouTube, like I give out free content, which is also helpful. For now, you guys, I wish you the best. Do a lot of back testing. You back test a lot, and then you can also ask me some questions on Telegram. The link will be in the description. So you can also join mentorship if you're interested. If you're interested, you can also join mentorship. It's a paid mentorship program. You can pay and join if at all you wish to do so. So for now, I wish you the best.